Hi, everyone. Like Ronnie said, my name is Kristina Hind. I am a CPA, and I have been doing this. Let me just go over to my slide. This is let me back up for a second. Um, the agenda. So I'm going to do my introduction, explain who I am, my background. We'll go over what a profit is, what that means versus revenue, bookkeeping best practices. I have a quick slide just outlining different technology that would be really helpful for getting started, understanding your financial statements, and then to wrap it up, just basically different entity types and some tax tips and basic tax planning, just to make you aware and be able to leave here saying, okay, I have a nugget of knowledge that I can bring to my accountant and ask the question. So like I said, a little bit about me. I graduated from Hofstra University. I have my master's in taxation, and the reason why I went into accounting was actually um, from my childhood. So my parents were struggling when I was growing up with money, like a lot of people do, um, all over the country, and I had said to my father, what can I do to help people with money? And he responded and said, become an accountant. So that stuck with me for a long time. And I actually went to school. I started out doing nursing because that's what my parents pushed me to do. And I decided within like 6 months, I was like, I don't know, nursing's not for me. Um, Let me switch to accounting because that, like I said, stuck with me, helping people with money, and it was just like a calling I had. So in college, they push a certain career trajectory, like follow these steps and do these things to be successful. So um, being that start in public accounting, which for those of you who don't know, that would be like the big four firms: KPMG, PwC, Ernst and Young. So I followed, I am a rule follower. So I followed those steps. I went into public accounting. I wasn't happy there. I was traveling a ton, which for some people that's like a dream, but for me it wasn't. So I decided to leave, and after that I went into financial reporting, and then I actually ended up working at Hofstra for a little while. So I have a background in many different fields. I have audit, taxation, I did budgets, and then my last corporate job, I actually made the decision that I was done with that world. I didn't feel fulfilled, and I was thinking of actually completely changing my career. But all that while, I was working nights and weekends for a local CPA firm, family owned, and with the idea maybe I would want to go into business, like maybe I would want to start my own thing, but not really sure if I would want to do that. So when I left my 9 to 5, I called them up and I said, I'm thinking about changing my career. Can I work for you while I'm figuring that all out? And they said, yes, come aboard. We need help. So working there actually gave me the opportunity to slow down, take a breath, and figure out why I went into this in the first place. It gave me the opportunity to work with individuals one-on-one because I was doing taxes with, people like yourselves and helping small businesses. And it really made me realize, actually I am in the right field, and I don't need to go back to school. I don't need to spend a whole ton more money going back to school. And I started my practice, and from there it's been a journey that really has been, I'm very grateful for, because it's been a lot of fun. So that's a little bit about me and my story. and hopefully it inspires anybody who may be going through something similar. So now getting into the meat and potatoes of why you're here, and that is running your small business, generating a profit. You want to make money doing that, right? You want to fund your life with your small business. And whether you're like me, coming from a 9 to 5 and trying to quit and go full time, at the end of the day, you need your business to fund your life. So how do we do that? So we need to make sure that we have a profit in our business. So a profit, your profit is a concept that I've seen small business owners confuse with revenue. So revenue and profit are two different things. So revenue is the money you're making, that you're bringing in from generating from your sales. So that's gross. Your profit is what you're keeping in your pocket after you're paying for all of your expenses, and the money that you keep at the end of the day. So basically what is that? The equation is profit equals revenue minus expenses. So having a clear picture and an understanding of your profit is extremely important, because without profit, there's no way to sustain your life. So our goal from bookkeeping is to generate reports that you can use to now analyze your numbers, analyze what's going on in your business financially, so that you can make investments, or take money out of the business to pay yourself. And those reports are going to give you that information that you need to move forward with those decisions. So like an example of that would be, say you're a service-based business and you're offering different services to your customers. The ideal would be to have a line for each service showing you, okay, let's just take a very general example. Say you have a beauty studio and you're offering like different wellness treatments, whether it's massage therapy and facials, and maybe you have like a nail service that you're providing. You want to see how much money each of those services are bringing in. So this way you can say, okay, like how much time am I spending to generate that sale? And is it providing me with a return on investment? Or am I spending too much time doing this and not making any money doing it? So you'll be able to say, okay, let's slash that and not do it anymore, or let's put more energy and marketing into that specific service. The other thing that you'll be able to do by understanding what your profits are is you're going to have a picture of what your expenses are. So say you're overspending in an area, or maybe you have different subscriptions that you're not using, and you'll be able to say, let's cancel that and move on. So this way, again, you're keeping more money in your pocket. So essentially, that's the ideal. You wanna have that number at the end be as high as you can. So how do we get there? Again, that's where bookkeeping comes in. So that's the foundation of everything. And bookkeeping, the definition is bookkeeping is the practice of organizing, maintaining, and categorizing a business's financial records. So in layman's terms, it's tracking your income and expenses. So every time you have a transaction come in, you want to make sure you're tracking that. So the main components of bookkeeping is, like I said, recording your financial transactions, processing your invoices, collecting payment, paying your bills, reconciling your bank account, and making sure that all of that information is accurate is absolutely essential, because if you don't have accurate records, then making decisions that based off of inaccurate information isn't going to help you scale or grow your business. So to increase your profits, you need to have a clear picture of your numbers. You need to make sure that you can see exactly where your money is going, like what expenses you're paying for, and what service offerings are bringing in the most revenue for you, and how that felt generating that money. So when you see a clear picture of your income and expenses, you're going to be able to say to yourself, okay, how did it feel generating that income? Was it difficult? Was it easy? Did I put, minimal effort into this service offering and it's my biggest revenue churner, and maybe I should put more marketing into that. Maybe I should put more effort into that, because if it's bringing in that much money doing very minimal work, then that's what you want to focus on. So that picture is essential, because it's going to give you clarity, and it's going to be able to, you're going to be able to make decisions based off of that information. So that's basically the gist of why your P&L is so important, and really necessary for running a business, especially a business that you want to sustain your life. And again, and how do we get there? We get there through bookkeeping. So again, bookkeeping is the practice of maintaining your financial records, recording your income and expenses, and doing so accurately. So this way that picture is useful to you and actually something that you can take away and know that this is the operations of your business and what that generates for you. So bookkeeping best practices. So before I really get into like the bookkeeping part of it, it's so important to set everything up the correct way from the beginning. So I think it's essential to have, number one, a separate bank account. You want to have a separate bank account for your business versus your personal finances, because commingling, even if you're a sole proprietor, technically you don't have to have a separate account, but how are you going to tell how much money your business is making if you're commingling everything? So you want to make sure that you have a separate account, even if it's in your personal name, where you use only that account for your business. Best practice, in my opinion, would be to form an LLC right from the beginning. You would do so by going to the Department of State that you live in's website and file an articles of organization. In my opinion, I would hire somebody to do it, whether it's like a LegalZoom or a local company that does it, or an attorney can do it for you. And I do have some contacts that I can share with everybody if that is something they need. You need. And then the next step from there would be to apply for your EIN, which is your entity identification number from the IRS. It's very simple. You go to the IRS website, you can Google it if you want, and you fill in the information and they generate the EIN number for you pretty much on the spot. So then the next thing that, once you have your LLC, your EIN number, your separate bank account, you want to make sure that you have a method to invoice your clients and collect payment. When possible, try to avoid Venmo. I know Venmo is a very popular method of exchanging money from person to person, but it makes tracking for bookkeeping purposes difficult. There's no like description of what something is. It will slow the process down. So especially if you're hiring a bookkeeper, you want to avoid Venmo because they're just going to have a ton more questions for you. And then to pay yourself, because I think that's the biggest concern when you have a business is, how do I pay myself? So it's a really good question. And for a business that's just starting out and is just a single member LLC, it's really simple. All you do is transfer the funds from your business bank account to your personal account, and that's it. And then you paid yourself. When it comes to an S corp and a partnership, things do get a little bit more complicated, and there are more rules around that. But in the beginning, when you're just an LLC, at that point, it's pretty simple. So the next bookkeeping best practice is make sure that you're maintaining your receipts. So the IRS is going to require that you have receipts to substantiate your expenses if you were ever to get selected for an audit. And there are times that it's just purely random, that the IRS's system just picks you out of a hat and they say, okay, we're going to audit you for no other reason than it was just bad luck. So you want to make sure that you're maintaining your receipts in a system that you can easily pull from. So a great option would be a Google Drive or Dropbox. There's also companies out there that you can pay for to organize your receipts, and they will hook up to your accounting software and link everything and categorize everything for you. But in the beginning, and even not in the beginning, to be honest, I think my preference would be to just have a simple Dropbox method of having the month, the year, and the vendor as the title of the document. That way it makes it really easy. You just double click in the year that you're they're questioning, and then you can pull the receipt up right away. You can even, when you're checking out at a store, like if you're going anywhere and buying something and it's business related, you can have the receipt emailed directly to you. So that makes it much easier than having to scan it or take a picture. So definitely just be aware that you can get audited just randomly. So it's very important. Now, the IRS doesn't always require a receipt. If an item is under $75, they don't require it, but that doesn't mean that they won't ask for it. So it's better and best practice just to keep all of your receipts. So at a minimum, I would be tracking your income and expenses on a monthly basis. For someone who is not maybe that savvy, like with accounting, and you're unsure, my suggestion would be to use an Excel template. There are many templates out there that you can buy. You can even look on Etsy for them. And they're sold all over the place. I do have one that I can send to you at the end of this meeting. So it makes it much simpler than using accounting software, because although that's my preference, I'm also an accountant. So it can be easy to screw it up, the accounting softwares, because like QuickBooks Online, it will make a suggestion that sounds like it's right, but it ends up not being correct, and then it screws up your books. So I always recommend, if you're using software, to at least have a bookkeeper come in once a quarter, or your accountant once a quarter come in to quote unquote audit your books to make sure that they're accurate and giving you information that's useful. And as in regards to the Excel template, I think it's much easier to not make a mistake, because you can say, okay, let's put the date, the description, the vendor or the client that paid you, and money coming in versus money going out. And then you can provide that to your accountant at the end of the year, and they can sift through and make sure that that information is presented accurately on your tax return. So
can I just break in here for one quick second?
Sure.
One quick second. We do have some questions, but what I was going to say in reference to what you just said is it's probably the best idea when you start your business to meet with someone like you to help you get set up properly. Because if you don't do it right from the beginning, you're going to have to go all the way back. And if you've ever had to do that, it's harder than doing it right the first time. So I would say to make the appointment with someone, you or anyone, and really learn how to do a proper Excel spreadsheet if you're not going to be using the software.
Right.
Leslie, do you want to mention the questions, or Kristina, do you want to wait for a minute or two before you?
We can do the questions. And I just want to add to what you're just saying, Ronnie. You know, it is an investment in the beginning. You know, obviously all businesses are, but that investment is going to be much cheaper for you if you do it correctly in the beginning. Because if you don't have that all set up properly, correcting it later is going to be messier, and then you have to untangle everything, and then it ends up costing you more money because now these professionals are spending more time having to break it down and correct it for you. So it's much cheaper to do it from the beginning than later on, and less stressful mentally. So but yes, go ahead. Let's do some questions.
Okay, Cheryl, did you get your question answered sufficiently? She wanted to know what the best software to use for a small business would be.
Yes. So my preference is either, if you want to use software, would be Xero. It's low dollar cost per month. They have an early start package that is like $15 a month, so it's very inexpensive, and it recommends things less often than QuickBooks, so it's harder to mess it up. I think QuickBooks is more expensive, and it, like I said, they have these suggestions that make sense but end up being like not correct. So I've seen a lot more mistakes in QuickBooks than on Xero. So that would be my suggestion. There is Wave, which is, I believe they have a free option for software. So that is another one that you can look into.
And Maria would like it if you would share your business formation contacts.
I'm not sure what that meant, but I told her to call us. But go ahead, Kristina.
Oh, okay.
Answer. That's good.
Yes. So there's Hubco, which is if you're in New York or Long Island, they're located in Hauppauge, but they do everything virtually. So the website would be, I think it's Inkit, INCIT is the website, and then entity name is Hubco. And then there's also, I have an attorney that I work closely with. Her name is Rebecca, and she is from, I believe it's Lang Weber. Yes, Lang Weber is the firm name. And she's a great attorney, and she works, that's her specialty, is small business.
Beth would like to know, how do the taxes change depending upon what structure you use for your business? Oh, this is a long one.
Yeah, that's a whole slide at the end.
Yeah, good.
Yeah, we'll get to that. That would be a long question.
Okay.
But it's a good question and something we'll address towards the end of the presentation.
Now, Daniel is asking, when uploading receipts, what is an easy way to keep notes about what the expense was used for?
So there is another receipt management. I think I have it on one of my next slides. I just want to see. Yes, HubDoc. So HubDoc is another software that you can use to manage your receipts, and in there you can put notes. Of course, there's a fee for doing so. Another practice that I personally do actually is the bank that I use. I'm able to upload a receipt directly into the app for the bank and I have a notes section where I'll write notes like specifically for like if I'm going out with a client or a colleague. Like we went to coffee the other day and I put in there, I uploaded the receipts and I wrote what we talked about and who it was with. Because that's another thing. If you're going out to like a dinner or lunch with a client, the IRS is going to want you to keep that receipt, but not only keep the receipt, but they want to know who you dined with and what you talked about. So that's something that I put in my notes in my app, on my bank app. So,
and of course, that's never important until or unless you get audited. Then you get the information.
But doing it as you're going is much easier than going back in time and trying to remember or fake it because who's going to remember, right? Because I don't remember who I ate with 2 weeks ago. So I don't have the slides up right now because I'm somebody just asked. I had to switch so I could see you all while we're answering questions.
Okay,
but I will put that back up.
Christina's asking, she's been managing a program where she gets paid from a funder and then she pays the subcontractor. She inherited an Excel worksheet that keeps receivables separate from payables, but she had a hard time tracking by program if she had received her payment. And then also paid the corresponding subs. She created a separate sheet to track the project, but now she has 3 sheets to maintain. Do the applications manage this type of situation?
Yes. Yes. So in her scenario, Excel is not going to be the most efficient. It's just not. It's going to be way too manual for you. Yes, nightmare for sure. It's too manual. You need a software. You need a bookkeeper. If you're at that level of transactions, you definitely want somebody who knows their way around the software, because the software is going to, when you get paid, so you're tracking your revenue, right? So you have an invoice, you invoice the client, you have that revenue, you haven't been paid yet, so you have a receivable on your books. But when you do get paid and the money comes into your account, the software is going to match that payment to the invoice. So now it's going to link it to that invoice and now remove the receivable from your books. So it's all very seamless and you don't have to work, but you have to make sure that you're matching and not duplicating revenue. So that's where things can get a little bit dicey and where mistakes are made. So that's why I recommend hiring a bookkeeper, or at least having a bookkeeper come in to review your work. So yes, definitely the software, and QuickBooks and Xero both have that function of matching your cash to the receivable. Now, the last thing I want to mention for bookkeeping best practice is reconciling your bank balance to what your software has as the balance. So what does that mean? So you're going to look at your balance sheet. That's where the balance of your cash is going to sit. So you would go into your software or into your Excel template, and you're going to say, you're going to run a report, you're going to pick balance sheet, and you're going to look at, say you're using Chase Bank, you're going to look at Chase, and you're going to look at that balance as of, let's just say it's May 31st, and you're going to go open your bank statement and make sure those two numbers agree to each other. If you don't agree, you know that there's an issue with your books, and you know there's either income missing, expenses missing, there could be errors or fraud. So doing these reconciliations is absolutely essential, and it's the best way to detect errors and make sure that your reports are accurate at the end of the month. If you're not doing it, it's what bookkeepers like to call a red flag. So it's like one of the first things that we check is to make sure that you're reconciled through like the latest month, or at least close to the latest month. And again, QuickBooks and Xero both offer solutions to doing that, so it's not so manual, but it makes it easy. I would say that I like QuickBooks reconciliation process better than Xero, but again, Xero is my my preference for bookkeeping software. But if you're doing it all in Excel, the easiest way to do this manually would be to take your beginning bank balance, so say it was $100, add all of your expected cash received, so not necessarily revenue, because that may not reflect what you've been paid so far, but cash received plus minus cash going out, and that's what your ending balance should be. And if there is a difference, then you know that there's something going on. Maybe there's something you missed, or maybe there is a duplicate transaction that you recorded, or maybe there's something on the bank that you weren't aware of. So that's really important to maintaining your books. Okay, so just to briefly, I wanted to provide this slide to everybody, just so when you get the copy, you can quickly reference this tech stack. So like what we just spoke about, popular bookkeeping software, an Excel template, which I'll give you a link to, a really good one that a colleague of mine put together, Wave accounting. And I went in order of like free to most expensive. So Excel, Wave is a free option. Xero is the least expensive and, in my opinion, most user-friendly, and QuickBooks Online. And then receipt management, there's Google Drive, Dropbox, and HubDoc. And then again, I mentioned earlier that you want to make sure that you have a method of invoicing and collecting payment from your clients or customers. So Square and Stripe are really popular options. There's tons of payment processors out there. So when it comes to your specific industry, what I would recommend is speaking to peers and seeing what they're using, because each option is going to provide you different features, and it may not be necessary for what you're doing. So definitely speak to some people in your field, and then also speak to your accountant and what they recommend. But Square and Stripe both have like the terminals that people can insert their cards. And then HoneyBook is a customer relationship platform. So you can do if you're service-based, you can do all your contracts through there. Your clients can electronically sign, and you can collect payment, and then that payment goes through Stripe, and then it will all link pretty smoothly to your bookkeeping software. So those are just like some top recommendations. There's a ton, like I said, there's a ton more out there. So do your due diligence and talk with a few people and get some recommendations. Okay, so the next slide, I wanted to just touch base on the 3 most common financial reports that you should be aware of and you definitely should be looking at. So if you have a bookkeeper that you hired, you want to make sure that he or she is providing you with these reports on at least a monthly basis, unless you agreed to like a different term. So maybe it's you want to receive them quarterly, but my recommendation always is at least monthly. You want to be looking at these reports to make sure that you understand the money coming in and out of your business. and what's going on so that you can make those decisions. So really quick, so an income statement is a statement that is going to show you the revenue that you earn during a specific period of time, and how much of that money you kept after you paid for all of your expenses. So like I said, it's for a specific period of time. So you can look at 1 month, you can look at the whole year, you could look at 2 years if you want. It's just a simple like running a report, and that will generate the amount of information that you want to see. Now your balance sheet it provides a snapshot of your assets, what you own, versus your liabilities, what you owe, and the difference between the two, which is your equity in the business. And then your cash flow statement is basically a statement that's going to provide you the ins and outs of your cash. Because like we had mentioned before, and what Kristina had kind of touched upon with her question, is that you may have revenue, but that doesn't always translate to cash. So your cash flow is going to tell you how you went from your beginning balance, your cash balance from the prior month, to your ending cash balance for the current month. So the inflows and outflows of money. I think out of the three of them, cash flow can be a concept that can be harder to understand, because you need to make sure that you understand how like payables and receivables impact your books and how the balance sheet items impact your books. So just to touch upon, like, I want to look at this example together and show you how it all flows together. So let's start with the income statement. And so for the month of March, Kristina's beauty salon brought in $80,000 of revenue. She paid her employees $15,000. She bought beauty products for $20,000, and now her gross profit after those direct costs of generating a sale is $45,000. And then she paid all of her operating expenses, rent, bank fees, advertising, and that left us with a profit of $38,150. From there, so now you're looking at your bank account and you're saying, well, we have a profit of $38,000, but we only have a bank balance here of $15,000. How come those two amounts don't agree? I get that question a lot. It's something that is like sometimes like frustrating for business owners. So I think that this cash flow statement is going to answer a lot of those questions for all of you. So in this example, so say we started the month with no money in the bank. So I like I said, you would expect at the end of the month, well, I should have 38 grand in the bank. Like, why don't I? Right? So the reason why you don't is we paid for $5,000 of our expenses using a credit card. So we have to add that cash back to this $38,000 because it was expenses that were paid for and recognized, but we didn't use cash to pay for it. So we're adding that back to this profit number. So then the next inflow of money was, okay, I added $1,000 to the bank, right? So I took $1,000 of my own money and deposited it into my bank account. So that, again, increased our money at the end of the day. Then within this month, I took out $29,000 in owner's withdrawals. So I paid myself $29,000, and that brings our bank balance to $15,000. So this is just like a very simple example of how cash flow works. And I just want to point out one other thing before I move on to the next slide. But say you had receivables, which is you generated revenue, right? So you had a sale, but you didn't collect the money in the same time period. So maybe you collected it the next month or 3 months later. So if you had a receivable, then this number would be a negative amount because you have revenue that you didn't collect the cash on. So you have to subtract that from your profit. So it's just I just wanted to kind of touch upon it. I don't know if anyone will end up retaining it, but at least you can refer back to these slides and kind of just study them and how it all flows together. Okay, so entity types. I know somebody had a question on this. So there's a few different entity types that I would recommend to small businesses. So there's your sole proprietorship, which we touched upon earlier. So this is, you don't have to file anything with the state. But say you wanted to run your business as a sole proprietorship, my recommendation would be to, at a minimum, get a DBA. And that is something that you can file with the county and basically run your business under a different name. And then you can also apply for an EIN for your DBA. Again, I would still have a separate bank account, but it's the easiest form of entry, I would say. So a sole proprietorship is an entity that is going to be reported on a Schedule C, which is an attachment that goes with your Form 1040. So what you file with the IRS every year. So it's just going to be another schedule that your accountant puts together, and it's basically just sent all together with your taxes. That being said, just so everybody is aware, a Schedule C as well as an LLC, they are taxed the same. So you're going to be subject to what's called self-employment taxes. At a minimum, you will pay 15.3% of your profit to the government, to the IRS. So again, that's why that profit number is so important to know, because you need to know how much is my profit so that I can save money for taxes at the end of, so I'm not hit with this huge bill at the end of the year, because I've seen that a lot with small business owners. They're not saving that at a minimum, like I said, that 15.3% every month, and then they're shocked by the bill, and it can be really stressful and you know, it caused a lot of heartache for a lot of people. So at a minimum, put that 15.3% aside every single month. Now, what are self-employment taxes? Because what does that even mean? So it's actually a really important concept to know. When you're paying self-employment taxes, that is your way of paying into Social Security and Medicare. So you're paying the employer portion and the employee portion. So if you have a W-2 job and you look at your W-2, you're going to see how much you paid to both of those entities. So for Social Security and Medicare, your employer pays the same exact amount on your behalf. So when you're self-employed, you have to pay both sides, unfortunately. But the side that is the employer portion is a deduction on your personal tax return and lowers your taxable income. So like I said, make sure you put that 15.3% aside. On top of that 15.3, you are also hit with your income taxes. So depending on what bracket you're landing in, that rate is going to change. So it could be as low as 10%, but it can go as high as 37%. So again, it's best to work with your accountant to come up with those estimates. They can calculate them for you so that you're paying throughout the year. And again, the LLC and the sole proprietorship are taxed the same exact way. The biggest difference is an LLC is going to give you legal protection that the sole proprietorship won't. So the LLC is gonna, I'm not an attorney, so I'll stay in my lane, but just briefly, it's going to protect your personal assets from the activity that goes on in your business. And that's something that if any of you wanted to speak with Rebecca about, she could talk about all of the legalities of an LLC. So corporation. So my recommendation for a corporation most of the time is an S Corp. So an S Corp is basically an election that you'll make once you hit a certain profit amount. So say you were making $100,000. I would say once you're in that $50,000 to $100,000 range, bring it up to your accountant. And if you don't have an accountant at this point, make sure you got one, because you don't want to do an S election on your own. The form is easy enough to fill out. It's basically one page that you fill it out, you sign it, you send it to the IRS, but the impact of that decision is huge on your operations and what your requirements are for the IRS. So when you have an S corporation, your profit is no longer subject to that self-employment tax that we just spoke about. It's only subject to the income tax. So you're going to file a separate tax return for your S corporation. And as the owner of the S Corp, you will receive a form called a K-1. And the information on that K-1 is basically your share of the profits. If there's any interest, if there's any distribution, all that information is going to be on that form. And then that is reported on your 1040. And then you pay income tax on the profits of the business. That is the big, that's like the big draw to an S corporation, because you're saving on those self-employment taxes, which can be a huge dollar amount. But that being said, S Corps are required, owners of S Corps are required to take a reasonable salary. If you do not have salary on the books and you don't have a line on filled out for that amount on your tax return, it's a huge red flag to the IRS, and you can end up getting audited. So again, that's why it's so important to work with an accountant when it comes to S corporations, because you're now required to file payroll taxes every quarter. You have to register with the state for unemployment insurance, and you have to calculate what that reasonable compensation amount is. Again, if it's below what your profits are, so say you were making $100,000 and you and your accountant have decided that your reasonable comp amount is $50,000, now you're going to save self-employment taxes on that $50,000 difference, and you're only going to pay into Social Security and Medicare on 50 grand instead of 100 grand. So that's where you can see the savings, and that's where S Corps can be really beneficial, but they have to be done properly, especially now the IRS has really cracked down, because they've been losing a lot of money for Social Security and Medicare because of S Corps, because people have kind of taken advantage of the system and just not taken a salary. So that's, but again, I don't want to like scare anyone about it, but it's definitely a good option, but something you should work with an accountant on.
Well, Kristina did have another question.
Who did?
Kristina P had one back. Is it typical to get paid from, we should have done this one on invoices. Is it typical to get paid for multiple invoices in one payment?
I tried to answer that, but maybe not.
Oh, okay. I'm not getting visibility of that.
Okay.
Okay. She has a client that funds several different programs and they often pay multiple invoices at once. And does that
Mhm.
work in those apps that were mentioned?
Yes. So when the payment comes in, it will give you the option to there's a tab that says match, and then you can click each invoice that coincides with that payment.
Now, David has an interesting question. I've always wondered it myself. What's the difference between a bookkeeper and an accountant?
I thought I answered
Um,
that too, but maybe not.
Oh, okay.
That's okay.
um, so a bookkeeper, okay, answering this question is I don't want to say hard, but an accountant it's a very broad term, right? Like I consider myself an accountant. I'm a CPA, obviously. I'm an accountant. There's different levels of accounting though. So accountant is somebody who can who's going to use your reports and analyze those reports and give you a story, right? They're going to be able to give you some information from those reports. That's like a typical corporate accountant. They could also be your tax preparer. So that's something that accountants do as well. A bookkeeper could be all three of those things. So like for instance, I'm a CPA, so I'm a bookkeeper, I'm an accountant, and I'm also a tax preparer. So a bookkeeper is somebody that's going to record all your financial transactions, make sure that all of that information is entered properly, everything is reconciled, and generate that report for you. So if you have a person that is just solely a bookkeeper and that's all they do, that's what they're going to do for you. I did hit on this first bullet in my last slide, but basically I just want to touch upon like the basics of tax planning. So again, at a minimum, you want to be putting aside that 15.3% a month based off of your profit. So say you made $10,000, you want to make sure that you put $1,500 aside for self-employment taxes. And then ideally, I would put aside, a total of 25 to 30% because you have to also pay your federal income tax and your state income taxes. So all of that has to be paid. So you want to make sure that you're saving for it throughout the year and making your estimated payments as well. Not just saving for it, but paying them because the government wants their money throughout the year. Otherwise, they hit you with underpayment penalties. So you don't want to give them any more money than they deserve. So pay your estimates, work with your accountant, and if you have any questions, you could always reach out to me too. I'd be happy to answer them. And then I wanted to just basically touch upon some tax saving strategies that are out there that are great for saving for retirement as well. Because I think when you're self-employed, that's a big concern for people because you don't have the employer match and like all those things available to you. So SEP IRAs, self-employed, I forget what the P stands for, but it's basically a self-employed IRA, which is different than a traditional IRA. So that is available. So basically, to make it really simple, if you have an LLC and your profit is $100,000, you can put aside up to 25% of that profit into a SEP IRA, and it is an expense to your business. So you're deferring some of the taxes paid on that profit to a later point in time. When you take the money out of the SEP IRA, that's when you would pay the tax on it. So it'll save you some taxes currently. And then the same thing goes with the solo 401k. It's a similar investment vehicle, but it gives you the ability to contribute more. You can put the 25% plus whatever the salary deferral option amount is for that year. So for this year, I believe it's $30,000. So it would be 30,000 plus that 25% that you can put away into a retirement account. Again, this is something that you should work with a financial planner on. But they are investment vehicles that are out there, and there are other options that you should be aware of so that you can not only save for retirement, but save some money in taxes. And again, once you reach that annual profit of 50 to 100,000, definitely contact a CPA or an EA and get the ball rolling on having a conversation of making that S election. So this way you can save some money on those self-employment taxes. So that's basically it for my presentation. I have a resource page here. We didn't really touch upon it too much, but here are some payroll providers that are really great. Gusto is one of our favorites in the industry. They're really low cost and they're a great option. Yeah, Gusto is great. They have great customer service. ADP also, it's more expensive than Gusto, but they have more of like an HR function at ADP. But if you're not at that point, if it's just you and you're a solopreneur and you need to pay yourself a salary because you're an S corp, Gusto is definitely great. And then Sure Payroll is another option that you can look into. And then my top recommendations for banks would be Chase. I actually just met with somebody from Chase. They have great programs to help small business owners that are free. They come with, like, when you have a bank account with them, they have also a small business advisor that you can work closely with, and programs out there to help with funding, and just they have a lot of good information that I wasn't even aware of until I met with them. And then Relay also is an online bank that's really great. If anybody's heard of Profit First, that's what they follow. So you can have like many different bank accounts for different buckets of what you want to save money for. And then Wells Fargo is just a bookkeeper preferred because it's really easy to give your accountant read-only access, and it links out to everything really great, and it makes it nice and seamless. So those are just some resources, and that's it. And here's my info.
And we have a couple of more questions.
Sure.
Ronnie did a good job answering that one. Ronnie, did you answer Daniel Phillips's one?
I did not.
Okay.
That was a good question, though.
Okay. Yeah. An earlier slide mentioned to avoid Venmo. He's collected rent that way. Is there anything he needs to be concerned about those previous transactions?
Nothing. Like, you're not going to get in trouble for using Venmo. I think, like, for bookkeepers, if you want to hire a bookkeeper, it's going to end up costing you more money at the end of the day, a month, to use Venmo, because there's no like description. My recommendation though is, I think they're getting better, but if it's possible to separate your business Venmo from personal Venmo, do that. Otherwise you're commingling funds, and if you have an LLC, that can create problems with the legal protections that the LLC provides you. But yeah, so if you can keep it separate, I'm okay with it. And if you're the one tracking everything, then that's fine. But if you're hiring a bookkeeper or having somebody come in and do it for you, try to avoid it.
Thank you, everyone's thanking you, Kristina. This was great. It opens the window. I'm sure there's a lot more questions that people have, but please either call us, make an appointment here, reach out to Kristina. I always worry when I say that, if we have so many people here on the in the workshop, that Kristina will end up getting inundated with phone calls, but I don't think that's ever really happened. I've never heard that from
Well,
someone, but
Yeah, and I don't
yes,
have my phone number, so
right,
I
right.
just,
That she did not put her phone number there. Wise
yes,
woman.
exactly, which
Yes.
was very smart. So yes, I'm sure that she will reach out and answer your questions if they haven't been answered here. And you can also make an appointment for free. We'll talk to you. We can access Kristina, hopefully Kristina.
yeah.
Yeah, so it's all good.